Hello everyone, welcome to our show where we simplify complex financial topics. Today we're talking about something that affects your wallet, your investments, and even your morning coffee price: inflation. And specifically, how inflation impacts two key parts of your investment portfolio: stocks and bonds. Let's dive in. Inflation is the rate at which prices for goods and services rise over time. A little inflation is normal, even healthy. But when it gets out of hand, like we've seen in recent years, it can have big implications for the stock and bond markets. Let's start with stocks. Inflation affects companies in different ways. Why? Because inflation increases costs for things like raw materials, labor, and transportation. This can squeeze a company's profit margins. If businesses struggle to pass on higher costs to consumers, their earnings take a hit, and lower earnings usually mean falling stock prices. But it's not all bad. Some companies, like those in the energy or consumer staples sectors, are better equipped to handle inflation. They can pass costs on to customers more easily, or even benefit from rising prices. On the other hand, growth stocks, think tech companies, often take a hit because their future earnings are worth less when inflation is high. Now let's talk about bonds. Inflation is basically kryptonite for bonds. Why? It's all about purchasing power. When inflation rises, the fixed interest payments from bonds lose value in real terms. This makes existing bonds with lower yields less attractive, causing their prices to drop. Central banks like the Federal Reserve often raise interest rates to fight inflation. Higher rates mean newly issued bonds come with better yields. But that also hurts the value of older bonds already in the market. So, inflation creates a double whammy for bond investors: higher interest rates and reduced purchasing power. So what's the takeaway for investors? First, diversify. Stocks can still offer growth potential during inflation, especially in resilient sectors. For bonds, consider options like inflation-protected securities, also known as TIPS. They're designed to keep pace with inflation. Second, remember that inflation impacts different investments differently. A balanced portfolio can help you weather these shifts. Inflation might seem intimidating, but with the right strategy, you can protect and even grow your investments. That's all for today. Thanks for watching, and as always, stay informed, stay invested, and stay ahead.